right, BC, I'm going to send you the link for Discord.
Put my phone on silent here.
Okay, there you go. All right. You got it, BC?
Yes, I got it.
Okay. So we are streaming and we're standing by. So just let me know when you drop it, and then we'll kick off. Check out Zoom. All right, got about 40 people here with us.
So, JP, do you think we're going to see another difficulty drop here in another 10 days or so?
Yeah, it's looking like it. I checked this morning, and I'll pull it up right now on my phone, but we're targeting a 15% downward difficulty adjustment. So we'll know more as we get closer. We're still about 10 days away, but network hash rate has dropped off a cliff, which makes sense because of the price action. So if I was a betting man, I would definitely be betting on a difficulty adjustment, a negative difficulty adjustment in 10 days. The question is, how big is it going to be? If it's double digit, then that's definitely going to provide a lot of relief for people that are still mining.
Yeah, that was my thought. That was my thought as well. I mean, I'm looking at the 15%, and I'm like, it was like 15% last week and 7% before that. I mean, we're going to be looking at an almost 40% reduction in 6 weeks.
Okay, Mo, it's posted, and we got people joining in on YouTube.
Okay, cool.
Depending on the site that you go to, you're going to see different estimates on where network hash rate's at. But the one I'm looking at shows network hash rate for BTC at about 35 exahash. And that corresponds to a difficulty adjustment in 10 days of about negative 12.5%. When I looked earlier today, it was actually at negative 15%. So that number is going to bounce around. And again, it's 10 days is a long ways to go, but we'll know more, in the next week or so where we're heading. And I think it's going to be heavily dependent on where BTC price is at that time. If we go south from here, I suspect that more people are going to leave the network.
Yeah, absolutely.
All right, BC, we're streaming, so let's kick this off. Let's start it here. So, okay, stand by. All right, and we are live.
Hey guys, how you doing? Welcome to the special edition of our Discord. It's going to be a little bit different than we normally do. Normally we do an intro of the Bitcoin, of the market, and then we go into Q&A. This one's going to be a special show dedicated to mining. We have a very special guest, JP Torre. We also want to thank Mo Capital, who helped us, who did the introductions and put the show together. And of course, Mr. Mo doing all the great work in the background, being able to provide you guys a stream not only on Zoom, but also on YouTube as well. So let's go ahead and just open up the show with a little bit of an introduction to Mr. JP Torre. And we would like to know a little bit about your story, how you started and how you got involved with mining.
Sure. So I got into crypto around late 2013, and we were in the middle of a bull market at that time, heading into Christmas. And I remember just reading articles about Bitcoin, and I read the white paper, and the concept of digital currency just made a ton of sense to me. I grew up playing video games, and a lot of the video games you have, sort of in-game currency and stuff like that. It's digital. And so that resonated with me immediately. And, we had gone through a financial crisis, which obviously was sort of the precipitating factor behind, Satoshi putting out the white paper and launching Bitcoin. And so, all of that stuff made sense to me. And I just gravitated to it immediately for whatever reason. And so I began buying Bitcoin. I signed up for Coinbase like a lot of other people did. And then I started reading, and the more I read, the more I learned about mining. And, I've been an IT guy for pretty much my whole professional career. And I had some data center space. I was running a small hosting company at the time. And so I decided to, place a pre-order for some early generation ASIC equipment, which arrived in 2014. And I got into mining really as a hobbyist. I did a group buy with some friends and learned some painful lessons along the way, and made some money, lost some money, and kind of have, been really fascinated and interested with mining and with the broader crypto market ever since. And I've taken breaks along the way. So starting in 2018, myself and a couple of my co-founders started Vulcan Mines, which was really my first institutional foray into running a mining facility. So we designed, built, and ended up operating a facility which is in Montana. So we've got that. We opened it as a hosting facility, and I can talk a little bit more about that decision maybe at some point. But that's kind of my backstory. I've also run other companies. I've run a software company. I ran the hosting company, which I mentioned, and have done different ventures. But I'm a huge fan of mining and a huge fan of crypto.
Awesome. That's great to hear. Now, you also we had discussed earlier, you had a presentation that you wanted to share with us to give us a little bit more information about how the specifics, a little bit more of what mining is for those who are interested. I don't know anything about mining, but just from the short discussion that we had, it's really interesting, all the really cool stuff, all the cool information you have for us. I would love for you if you can share it with the group.
Yeah, sure. So one of the things that I do is I run a meetup here in Southern California. I'm actually based in Orange County, California, and we've got the SoCal Bitcoin and crypto mining meetup. And so this is just based on a short presentation that I did back in October during the last meetup. So go ahead and share this. Can you guys see my screen?
Yes, we can.
All right, cool. Let me minimize that. So I'm also a member of the board of directors of the Blockchain and Crypto Mining Association. And, Mo and BC gave me the green light to go ahead and plug BCMA a little bit. It's a nonprofit or a 501c3. This is the first and world's largest professional association dedicated to crypto mining. The reason that we started the association earlier this year was really just to be the kind of single point of contact for local, state, federal regulators. And our mission statement is really to spread education awareness around mining and also, to talk broadly about blockchain and about crypto as well. And there's a bunch of other associations that kind of are more blanket associations dealing with blockchain. So we try to differentiate ourselves.
These are small.
Sorry?
No, I think that was some background noise.
Oh, okay. No worries. I thought there was feedback, like you couldn't see something.
No, it's okay.
Anyway, so I kind of already covered our mission statement. I won't linger on that. But BCMA, we currently have over 500 members, and we're, span the gamut of people that are involved in mining, from institutional investors to colo owners, hobby miners, and industrial scale private mining facilities. So I believe there was a link in the promo that you guys sent out to join the Telegram group. So if you guys are on Telegram and you want to come interact with people that are mining, we would welcome.
Didn't have time to capture it right away. They can go ahead and go to it later on.
Yeah, absolutely. That would be fantastic. So this is kind of when I did the presentation back in October to our meetup group, I go over updates, like I'm sure you guys go over updates about what's going on in the market from a trading perspective. And, mining is no different. Obviously mining, is fluid, and there's constantly new hardware coming out, new software, new firmware. And so we talk about that during our meetups. But I also covered kind of an evolution of mining, and it really started back in 2008, 2009 with the CPU. People were mining exclusively using the first mining program that came out, which leveraged CPU cycles, and the effective hash rate was really low, but the network was really small back then. And of course, Bitcoin wasn't worth much. It wasn't really traded anywhere, so it didn't really have any value. Back then, the block reward was 50 BTC. And every few years, the block reward shrinks. So we've seen the block reward go from 50 Bitcoin per block down to 25, down to 12.5, which is where we are right now. We're kind of in the third epoch, if you will, of the evolution of mining. And as mining has progressed and as mining has gotten more competitive, people have leveraged new ways of joining the network and have we've become more efficient in terms of the hardware that's available and how we mine Bitcoin today, as well as other cryptocurrencies. So obviously everybody is probably familiar with GPUs. That was kind of the next major evolution. And then we had FPGAs, field programmable gateway arrays. Those were leveraged for kind of a short period of time between 2012 and 2013. And they've come back into the mix now as altcoins, have emerged and become profitable to mine. People are looking back at FPGAs, and there's companies that are customizing bit streams and stuff like that to be able to mine altcoins using FPGAs. And then of course we have ASIC, the application specific integrated circuit, which is how most people mine these days using ASIC machines like ourselves. And I thought this was an interesting graphic. It's not my graphic, so whoever created it, I give all the credit to them, but kind of follows along the evolution of gold mining.
I love it. It's great. Great comparison.
So CPU mining, as I mentioned, was kind of the first generation of mining. It was used exclusively for the first year. Anybody who was mining Bitcoin back then was leveraging CPU cycles to be able to do that. And the first mining program was written by Satoshi himself. You can actually go and look up the code for it. And if you can see in the very bottom hand of the screen, I included a GitHub link to that code. And it was a really simple program. It was 454 lines of code. And it was used to mine the first 83,045 blocks. And a block back then, if you remember what I said, it was 50 Bitcoin. Now, every block, which is generated about every 10 minutes, contains roughly 12.5, or exactly 12.5 Bitcoin plus a reward for the miners for the transaction fees. So GPU mining was kind of the second generation that came out, and the first GPU mining software got released in October of 2010. By then, we had mined already over 4 million Bitcoin at a 50 BTC block reward. And GPU mining was really when people started taking the concept of mining to more of an institutional scale. People realized that you could actually really make money doing this. And so we saw people moving mining operations from outside of their homes towards, the very first data centers and industrial warehouses built around, mining cryptocurrency. This is an example of a photo that I found on the internet of a really early mining rig. This today looks more like, a GPU mining rig where you would mine something like Monero or Ethereum or something. But back then, people were mining Bitcoin using these GPU cards. And then getting into the third generation FPGA mining, in June of 2011, the very first open source FPGA Bitcoin miners were released. There was a company called Butterfly Labs, which people that have experience with mining dating back a few years will remember that company. They were the first commercial company that released hardware dedicated exclusively to mining. So this was kind of the birth of the manufacturing space around mining. And they sold a board that was 830 mega hashes per second, and it became the most successful commercial FPGA Bitcoin mining vendor. But FPGA proved pretty short-lived because very quickly after that, people realized that they could build specific chips dedicated towards the SHA-256 algorithm, which is what the Bitcoin network uses. And so Butterfly Labs followed up their success with the FPGAs by introducing the world's first ASIC miner. And these are the hash rates and the prices at the time that they announced it when they were doing pre-orders. And from then on, basically, the market was pretty much dominated by people that were continuing to release more and more efficient ASIC miners. And along the way, the market has matured. The node process size for the miners themselves, the chips inside the miners has shrunk. Things have become more efficient. And that's what's powering the network today. There's some new miners that have been released. We've been using 16 nanometer chips for the last couple of years. The golden standard has really been Bitmain's Antminer S9, which powers somewhere around 70 to 75% of the current BTC network. And pretty much every major vendor has announced a new, more powerful, more efficient chip. These chips range in size from 7 to 10 nanometers, And I kind of put together this table during our October meetup, just giving a snapshot of what had been released, what had been announced, and what the hash rates were, the power consumption, and the efficiency on these machines. So that's pretty much it. That's kind of a quick overview of that.
All right, great. Well, thank you so much for all that information. I really appreciate it. In your opinion, like I said, I mentioned before, I don't know much about mining, but I am really fascinated by how the whole industry works. And it's a whole different side to like what I do. We are involved in crypto. Well, I'm involved in crypto more on the trading side of it. But from the mining perspective, do you see a correlation between the price of Bitcoin and the difficulty that you're having with mining? I know you had said you guys were some companies were shutting down their mining facilities as the hash rate gets higher. Is there any correlation in price that we could say, okay, this is getting difficulty for them, so if they're shutting down, that's going to decrease the price of Bitcoin, or it's going to increase the price of Bitcoin?
I think miners react to price because, if you consider the unit economics and the revenue model of miners, we're really worried about a couple of different things, right? Price is obviously first and foremost because the Bitcoin that we mine, you have to sell in a lot of cases to pay for overhead, electricity expense, other expenses. And so that's an important component. The other one is network hash rate. So it's a function of basically how many miners are on the network and how competitive the market is for that BTC block reward, which is every 10 minutes, currently 12.5 BTC plus, the transaction fees. The profitability of an individual mining rig that you may have running. And so I think that, miners provide liquidity to the network, and obviously there's a lot of supply things going on there. I don't know that it's completely correlated because there's a lot of speculation on the market. And so people have postulated that, miners kind of provide a price floor where, you're not really selling below a certain level, and people are beginning to sort of leave the network. And we're definitely seeing people leave the network now as mining has become less profitable and as people are squeezed out because they have higher costs, higher electricity costs. So I think there is a correlation there, and probably somebody much smarter than me can figure out what that is. But
okay. Do you think that in looking at BTC's price, do you think that it's reasonable to say there's a certain amount of price that Bitcoin can reach as far as dropping that will give some sort of incentive to some of the bigger miners to bring the market up? Or do you think that really that's not their way of thinking? They're not looking at the price of BTC and saying, okay, if it hits $2,000, it's going to cost us too much to run these rigs. We're just going to go ahead and start flooding the market with some fiat and bringing the price up and see if we can get things going. Is that the correct way of thinking? Is that the way miners think?
That's not the way that I think about it. The way I think about it is, so first of all, a lot of people are, have probably read all these reports and stuff like that about, oh, this is, the price to mine a Bitcoin is 5,000 or 5,500. And if the price of Bitcoin, dips below that, then miners are no longer profitable. And that's just not true. because we talked about difficulty resetting every 14 days, and because we talked about as people leave the network, essentially the cost of production comes down. And so I think there's a lot of misinformation out there about, the true cost to mine a Bitcoin is heavily dependent upon your electricity price, how efficient, the facility is that you're running it inside of, what your fixed overhead is. All of these factors come together, and on any given day, you can find out what your marginal cost is to mine a Bitcoin. And furthermore, you can't really make a lot of assumptions around what the all-in cost to mine a Bitcoin is, because people pay different prices for hardware. If right now I had $20 or $25 million to invest in hardware, I could go to the manufacturers, because it's a buyer's market, and really beat them up and get them to sell me hardware with really, really thin, razor thin margins, because everybody's hurting right now as far as the ASIC manufacturers are concerned. But yeah, I don't think, everybody's price is a little bit different. And the point is that when, the cost of production exceeds your marginal cost of running the machines, your overhead of running the machines, then you turn the machines off. It's just as simple as that. And, miners may continue to mine in the negative for a bit, for a bunch of different reasons. I mean, you could, for example, have a staff, you could have a prepaid contract, for example, with a hosting facility or something like that. There's all kinds of reasons why you might mine and, running at a negative profit for a period of time. But people leave the market, and then the miners that are left mining on the network see the benefit of that, because it then increases your profit, because you're theoretically mining more Bitcoin. So the market sort of, the network heals itself, I guess is what I'm trying to say. I don't know if that directly addressed your question, but that's kind of the best way I can put it.
Okay, now when a miner decides that it's no longer profitable for him to mine Bitcoin, can he take that same rig and mine something else that's maybe it has a less difficulty, like an altcoin, and make up his cost there? Or is that not how it works?
Well, with ASICs, it's not how it works, because they're specific to an algorithm. And so, like, the kind of machine that would mine Bitcoin is only capable of mining coins that are based around the SHA-256 algorithm. So your options are like, Bitcoin, Bitcoin Cash ABC, Bitcoin Cash SV. There's a number of other lesser well-known cryptocurrencies that are based around the SHA-256 algorithm. But a miner is usually going to optimize around what's most profitable to mine. And there's a number of different tools out there that can tell you that in real time, basically.
Okay. Now that we've just seen all of this, these wars between ABC and SV, in your opinion, is it more profitable for you to mine either one of those two, ABC or SV, compared to Bitcoin? Or is that not the case? Is Bitcoin still going to be more profitable to mine versus ABC and SV?
It changes every day, and Bitcoin and Bitcoin Cash in particular, they seem to flip flop. And you can look at the chart of which is most profitable. They tend to stay pretty close to one another, because if one gets way high, then obviously a lot of the network hash rate is going to shift to mine that one. In which case, there's going to be less competition for the other one, and so they sort of tend to just trade. But the fluctuation between the two is usually within a couple of percent. I did see that today or yesterday, Satoshi Vision is actually more profitable to mine than ABC. So that's interesting.
Okay. Now, it's more profitable in the sense of the hash rate of your side of it, because I've seen that SV actually went up in price. So I'm wondering if that was a correlation, because it was easier to mine. Now the price went up, and it made it more sense to mine yesterday than it did today, maybe.
Yeah, I think that's right. I think price heavily influences the profitability. So if you have, ABC and Satoshi Vision, and ABC is, down 5% in a given day, and Satoshi Vision is up 5% in a given day, that's going to have a lot of impact on which one's going to be more profitable to mine.
Oh, okay. All right. You had mentioned you had a calculator, a mining calculator, to kind of figure out cost. Can you share that with us?
Sure. I just use a couple of websites. I'll share my screen. So here's one. It's called My Crypto Buddy. I'm a big fan of this one because it's the only mining calculator that I've found that allows you to specify selling profile. So you can kind of do some modeling around, when you're selling coins, if you're selling coins at all. And let's take like an S9, for example, just to kind of walk people through that have never seen one of these calculators, how this works. An S9 comes in a couple different models, but the one that's most common is the 14 terahash version. So you start there, and a lot of this is pre-populated for you. So this is grabbing the current difficulty for you. But if you want to adjust it to do some modeling around what would happen based upon a different difficulty level, you could obviously change that. The block reward, as we already covered, is fixed at 12.5 BTC. It's also pulling in price based on the average of the spot price that's available right now. And then we look at power consumption, and then you have to plug in your power cost. So this might be an interesting exercise just to find out right now where our break even is. Pool fee tends to run about 3% for most of the pools. There's obviously some exceptions. And then we can leave, I'm just going to put 0% on the reject rate. So this is basically the number of shares that the pool rejects because they're invalid. So that usually fluctuates somewhere between 0 and 1%. So you can see that if our electricity costs us 10 cents per kilowatt hour, we're losing $24 every month. If our electricity costs us 5 cents per kilowatt,
that's per unit, correct?
Yeah, this would be for an individual mining rig, and I wish I had one here to show you, but we could pull up a photo of one.
Okay, so $24 in negative at current price.
So I'm just playing with this just to find out where our break even currently is. So, okay, so right this second, our break even on power cost is somewhere between 7.1 and 7.2 cents per kilowatt hour. To give you a little bit of context, a week or two ago, the break even was about 5.5 cents per kilowatt hour. So you can already see how, even though price has continued to decline with BTC, the network has sort of healed itself such that as miners have exited the market, basically the profitability has come back a little bit. In other words, miners that have higher electricity costs may be able to plug their miners back in now.
Oh, okay. All right. Now, in your opinion, JP, what's the most profitable coin to mine? Is it Bitcoin or is it going to be the altcoins? Being that in the trading world, we find that the majority of the alts are always going to have a higher ROI than Bitcoin. Is it true in the mining world? Do you make more money on the altcoins than you do with Bitcoin?
It's tough to answer. What I would say is I'll pull this up. This is another website called aPanel, which one of the Telegram community members created. And this kind of gives you a list of all of the hardware that's available, specifically all of the ASIC hardware that's available. And if we sort this by profit, we can see that some are unprofitable and some are very profitable. And then we've got an assumption here based on electricity price. So if we just assume that people are paying on average 6 cents per kilowatt hour, this will refresh and this will update me. So clearly based on this, the most profitable thing to mine in terms of the hardware that you can go out and buy and plug into a wall and mine with is going to be this Obelisk, which mines Sciacoin. And there's actually an interesting reason why Obelisk is the most profitable. There was a hard fork that happened and it bricked a lot of the other miners that were available. And so Obelisk sort of has a monopoly on mining Sciacoin right now. Okay. And then, you can sort this by algorithm. So, you can see all the different algorithms that are available. And you can see that, SHA-256 is not at the top of the list. So I guess the answer is, yes, altcoins actually on a basis of just mining with one machine, Bitcoin would not be the most profitable coin to mine at the moment.
Okay, all right. Now, in places like where I live, like in Arizona, and places like Australia, where there's a lot of sun 24/7, why don't we see huge data centers of mining in those areas where solar power, in my opinion, would be, the way to go? Is it not? Is it because the equipment becomes so obsolete so quickly that people don't want to invest on the solar panels if that particular equipment that they're going to have is going to go obsolete? What would be the reasoning behind that?
Well, I know in Australia, you live in Australia?
No, I live in Arizona.
Arizona.
And Arizona
Okay.
is very similar to Australia. We have sun 350 days out of the year. It's just sunny all day, and all pretty much all day for 12 hours a day, especially in the summertime. So I'm wondering, why don't more mining centers move to Arizona or Australia or parts of the world where there's a lot of sun, like Africa?
Sure. I think the answer is that they are.
Okay.
The thing with solar that's a little bit unique from the standpoint of running a mining facility off of it is that you've only got solar power available to you during the day when the sun is out. And what do you do at night when those solar panels are not producing electricity? So you have two options really. You can either store it using banks of batteries, essentially, like the kind that Tesla are making, or you can choose to connect to the grid and draw off the grid at night. So if you're running in a net surplus during the day, you can sort of sell back to the grid, and then at night you can pull off of the grid. But a lot of companies are developing really massive solar farms, specifically with cryptocurrency mining in mind.
Okay,
so
great.
those projects are definitely happening for sure.
Awesome.
Australia is a little bit of a different story because Australia has some major problems. Their electricity there is extremely expensive.
Oh, wow. Oh, I did not know this. Mr. Mo, did you have any questions for JP?
No, I'm enjoying the show. Why don't we go to the community and see if we got some questions
All right.
for JP and the mining. I love, by the way, the mining calculator. I thought that was fantastic. But yeah, actually, you know what? What indicator would you advise an investor or trader interested in following mining? What would be like one or two key indicators that they can watch or just reference as they're taking trades? Is there anything specific?
I think that looking at where difficulty is headed and where network hash rate is could be interesting. You'd probably have to run some back testing to see how correlated those things are. And I haven't specifically done that testing because, as I already shared with you guys, I try to stay within my lane. Trading is not really my forte, but I'd say that there seems to be a general misconception in the community about how miners react to price fluctuation and what the true cost of mining is at any given time. So hopefully I've spoken to that a little bit, but I think that if you can keep a couple things in mind in terms of metrics to watch from the standpoint of understanding what miners may be doing and how we're reacting to the market, it would probably be looking at those things. It would be looking at difficulty and looking at where the network hash rate is. And even if you're not mining yourself, even if you don't care to mine, you're not interested in mining, it would be great to just have a fundamental understanding of that and play around with some mining calculators and understanding, where the break-even points are for miners and at what point they're going to begin to leave the market and what correlation that could potentially have back into price.
All right, awesome. I have a member in the community, Texas Crypto Guy. He would like to ask a question. Give me 1 second. Let me get him on here. Hey, Texas.
Hey, buddy.
How are you?
Appreciate you. Good. Thanks for having me.
How are you enjoying the show?
It's great. It's great information that I would have never known otherwise.
Awesome. Did you have a question for JP?
I do. So the question that I have is, how often do you actually have to sell your BTC, right? So obviously you have to pay for your operating cost. Do you sell it continuously, on a daily basis, weekly basis? And when you do sell, where do you sell it? Do you go on to exchange? Do you over the counter? Do you have different methods of doing that?
Great question. Everybody does things a little bit differently. For us, we kind of have our facility designed for dual purposes. We have our own private mining footprint inside our facility, and then the rest of the facility we've opened up to the public basically, and we lease that space to other miners. And so we operate that part of the facility as a hosting and co-location premise, essentially. So we don't often sell crypto. In fact, we haven't sold any crypto this year at all. We've been hodling, and I know you guys hate that word, but that's kind of where we're at. I I think in a vacuum, it would obviously be, we've been fortunate in the fact that we haven't had to sell it, but not every mining operation is as fortunate. They have to sell on a regular basis to pay for expenses. I'd say at a minimum monthly, probably. And if they're very well capitalized, maybe they can kind of wait things out for a few months. I think that miners can really benefit from more knowledge about the market and trading, the knowledge that you guys have in terms of understanding how to model out, with basically doing risk management around the underlying asset. And I can't speak for everybody, but my sense is that probably miners don't have very sophisticated plans when it comes to risk management, but the really, really big ones probably study that a lot more than the other ones.
No, that's great. Yeah, that was the biggest curiosity I had. Do you hold on to it, wait till the price goes up, and that's fantastic for you. So appreciate that response.
Thank you, Texas. I appreciate it. All right, great. I have a question here of a member that wants to know your opinion on what does he think will happen at the next BTC reward halving in terms of price, and also the next LTC halving.
Okay, so the next BTC reward halving is going to be somewhere around May of 2020. So we've got a little ways to go. We're about halfway through this 12.5 BTC block reward epic. And if you look at, there's some really good charts. Somebody could Google this and find them. But basically, it shows BTC price, correlated into the block reward. My expectation is that we're going to see Bitcoin really appreciate as we get closer to that May 2020 date. That's going to be a really important date to kind of mark your calendars. And, I'm just like everybody else. I don't have a crystal ball. I don't know where price is going in the short term, but my belief is that in the long term, we're going to see significant appreciation in terms of BTC price. Litecoin, I have to admit, I don't follow as closely just because we're not really mining any of it at the moment. If we were mining it, I would pay much more close attention to it, but we're mining predominantly Bitcoin at the moment. So that's what I tend to focus on a daily basis.
Okay.
I could do some quick research though on it and get back to you guys.
All right, great. Well, I can tell you right now that every person hearing this, when you just said that a Bitcoin is going to be appreciating by 2020, you put a big smile on everyone's face, because that's exactly the answer that we all wanted to hear. I know I did. So that's awesome.
It has to. I mean, okay. There's no other way.
Okay, great. That's great. Now, where do you see the future of mining going? Do you think the A6 is going to be pretty much the standard, or do you think there's going to be just a new evolution of the way people mine Bitcoin and mine other cryptocurrencies?
So we're kind of stuck right now in terms of efficiency. So, we're in the middle of a really bad market, as everybody knows, and it kind of came at an interesting time for miners because everybody's been using this 16 nanometer ASIC equipment for the last 2.5 years, and it's sort of reached end of life. And so if the market was healthier right now, you'd see people ditching all of that old equipment and nobody would be running it. Everybody would be investing in these new, more efficient machines, which are based around 7 and 10 nanometer chip. But because of price where it's at right now, I think we've extended the lifespan of that current generation 16 nanometer stuff because the new stuff is just way too expensive. The two metrics that I tend to focus on when I'm looking at making investments in hardware is dollars per terahash per second, which is just basically a ratio of how much the equipment costs and how what the hash power is of that piece of equipment. And the lower that number is, the better, because that means that I'm getting more for my money in terms of the hash power of the individual mining equipment. The other one that everybody focuses on is efficiency. So you see that measured in joules per terahash per second or watts per terahash per second. It's basically the same thing. And the lower that number is, again, the better off you are, because it means that you're using less electricity to basically mine the same amount of Bitcoin. So it's an interesting time right now. I think that the 7 and 10 nanometer stuff is going to be relevant for the next 2 to 3 years easily. It's tough to see the chip shrinking much beyond 7 nanometer. I know that people have plans for doing designs around 5 nanometer and 3.5 nanometer, but you're getting down to like the atomic level where you have like these weird, like almost quantum effects. And so I think what we'll see is people will move away from FinFET, we'll move away from silicon, and we'll move to another type of process altogether for making the chips. And so I think that from a hardware perspective, that's kind of the future of where mining is going to go. But it's not going to be in the near future. It'll be years and years down the road.
Okay. As someone who deals in percentages a lot, and when I look at to invest and to buy a coin, I always look at the ROI. Is there a percentage that you would say that if you invest X amount of dollars, you can expect X amount of return per year on your investment? And I'm asking more for like somebody who's an investor. Should I invest $10,000 and hold Bitcoin for 6 months to a year, or should I buy a mining rig and hold that for the same period of time? Do you think that that person would make more money, or is it very hard to calculate because of, like you mentioned before, the cost of electricity and so many other factors that might present themselves that we're not thinking of?
It's a great question. There's no silver bullet answer to this, but what I can tell you is that if we're in the middle of like a major bull market, I actually think that the case for just buying Bitcoin is much better, because you acquire that Bitcoin and substitute Bitcoin for any crypto. I'm just focusing on Bitcoin here, but you accumulate that Bitcoin instantly, right? And you get to enjoy the kind of the nice ride up as we've got this nice hockey stick, price curve. But with mining is more about long-term accumulation. And the strategy there is that our cost of production should always be below spot. So if Bitcoin's at 4,000, I should be mining Bitcoin at like 2,500 or 2,400. But that's slow. It takes time to accumulate Bitcoin. And you see that realistic payback periods in ROI for making the investment into buying Bitcoin mining hardware. Currently, I did the math, and you can get down to about 6 months. Depending on what your costs are. But on average, I tend to see that historically it's about a 10-month payback period. It's kind of like a pendulum swinging though, right? If you bought hardware back in January, an S9 was selling for $2,500 and even more after market, because the market was just so hot. It was a seller's market for hardware. Today, you can pick up an S9 brand new for like $200. So you can see that kind of price delta. And so how you buy your equipment is also really important to understanding whether or not you're ever going to achieve a return on investment of it.
Okay, great. Well, thank you for answering that. That definitely does make sense. Well, it looks like we are out of questions from the community, and I do want to thank you for coming onto the show. Mo, do you have any last questions for JP?
No, this was great. JP, thank you so much for all the insight and information and a wonderful presentation.
Yes.
And for you guys, if you guys have any more questions, please reach out to JP. He is in our Discord community. Also check out his website for Vulcan Mining. And once again, thank you again for a wonderful presentation on mining. This has been like super insightful for me because I know a little bit about it, but I think you helped me get a better understanding of how mining works.
Yes, same here. And JP, please don't forget to plug in, if you can, on Discord, all the contacts of that first page, the association that you belong to, so that people can go there, take a look at what you have going on. That'd be awesome if you can do that.
Yes, thank you guys so much for having me, and I will drop all the links in Discord. And you guys have been great. Thanks for having me.
I appreciate it. All right, guys. Well, I guess this wraps up our special edition on mining. I hope you guys enjoy it. I will come back on with you guys on Zoom probably tomorrow. We'll talk about the market. We'll do a regular session. We'll do the first half of TA and the second half of your Q&A and some more TA and whatever you guys want to discuss.